Hey, Ellie, thanks for coming back on the show today.
Thanks for having me back, Andy. It's good to be back.
It's the big one. Well, it should be the big one, but is it the big one? I guess
Mm.
that's what we are going to discuss today. Obviously, last week was the autumn budget, the one we were all waiting for.
hmm
And I want to have a chat to you about that today and get your thoughts on what it means for the market and for property investors, for lending, and how and if and whether we should start to think differently or do things differently as a consequence of all the announcements last week. So, I mean, look, just to kick things off, my opinions, and I'm keen to hear your thoughts, Ellie, but it wasn't a good budget. And I'm not going to sugarcoat anything, but it certainly wasn't as bad as I was expecting, and as I know a lot of people really were fearing. I mean, what do you think? Do you share that sentiment?
Yeah, absolutely. I think there was a lot of fear mongering, perhaps, with lots of ideas that came out beforehand of things. And I'm sure you're going to do a little bit of a summary of things that haven't happened. But there was a lot of things that we thought could happen that have not happened. And I think that, yes, I know it wasn't as bad as we thought. If we hadn't have had all that information and then we just got the budget, would we have felt differently? Was that the whole marketing technique? I don't know.
I know. And she's obviously kind of now in the firing line for potentially doing that and maybe misleading the public. I mean, who knows? And kind of who cares, really, I guess. We just want to get on with business, don't we? We just want to build our portfolios, and we just want to do right by ourselves, largely. What I did was to kind of pull out what I think are the key things that were announced that directly impact us as property investors. So what I thought we would do today is I'll just kind of high level summarize those for our listeners, and then we can circle back and touch on some of them and discuss what that means, how to interpret that, the context of all of that. So you mentioned a few things that were being discussed pre-budget that actually didn't get announced in the budget. So a few of those, and I think that this was good news. No national insurance on rental income, heavily speculated. That didn't happen. Good news. Obviously, there are other changes that we are going to discuss, but I feel like on the principle of that one was important. It was probably never going to cost a huge amount to landlords, but I think the idea of taxing that sort of income was quite different to, how it has been done today, and the principle behind, taxing income and taxing income from investments. So good news that didn't come in. There were no changes to inheritance tax. I was really surprised by this one.
Yeah, I was as well. But I think, again, it would have been a very unpopular decision, after the farming change that happened a couple of years ago and the fallout from that. I think, it would have been a very unpopular thing to do.
There are some other changes to things like business disposal, but I think that, the fact that they didn't meddle with inheritance tax was really, really, really important. Of course, no changes to stamp duty. I don't want to pay more in stamp duty, but actually it was one of the things that I did think that could have had quite a big impact in a few different ways. And I was surprised that there weren't any changes at all with stamp duty. I wouldn't be surprised if in the near future, let's say the next few years, there is a bit of a reform around stamp duty. But anyway, that didn't happen, and I suppose that's good news. So, the key measures that were brought in, a 2% income rise on property income. So the new basic rate will be 22%, the new higher rate 42%, and the new additional rate 47%. So essentially, landlords operating through their personal name, not through a business, will pay an extra 2%. And the revenue have confirmed that the personal allowances will get used on other income first, so leaving fewer ways essentially to reduce rental profits down. Now, dividend tax has also gone up 2%. So the basic rate on dividend tax will be now 10.75 up from 8.75. Higher rate will be 35.75 and the additional rate 41.35%. So if you pay yourself in dividends, and I know that is the case for a lot of our listeners, for us, that will have an impact. That's anybody running a company. So while there was a personal sort of attack for landlords of 2%, actually landlords even operating through their own businesses, that they're not getting away with it completely. However, I think it is really important, and I'm not an accountant, this isn't financial advice, but that is still by a long, long way, far more financially beneficial to pay yourself if you can.
Absolutely.
Because the dividend rate is just so much
It is
less.
so much lower than a basic rate of tax, isn't it? An income tax. So yeah, and I think as I'm not self-employed, my husband is, but we have this discussion all the time. And, coming from an employed point of view, self-employed people do pay a lot less tax, but also, and I know there's less benefits, I get that, we have this discussion often at home, but you've got more flexibility in terms of how you can pay yourself. And I think what has come out of this is that you need to be really smart. You need to build a relationship with a good accountant. You need to invest in that relationship, and you need to make sure that you are making the most out of everything that you can do, because there are choices that you can make, particularly in property, probably more so than in other business sectors. You can loan yourself money, you can invest money that instead of taking it as income, you can reinvest it within the business and use it to make more money. And there are plenty of opportunities to do that. So you've just got to make sure that you're making the most of it, really, and just being aware, I suppose, of what you're doing, how you're making that income.
I agree. And I recently recorded an episode on some of the options to structure a business and a business group. And there are some really tax efficient ways of doing things, not just necessarily owning properties through a limited company, but owning that limited company that owns your properties in a wider group structure. Yeah. It's not right for everybody. There are different ways of doing it. There are partnership options, but that sort of advice is quite specialist. And that's exactly what you're talking about here in parts as well.
But then understanding how that, sorry to interrupt, understanding how that impacts your other decisions. So if you are somebody who does very straightforward buy-to-lets and generally uses lenders that are quite high street, the high streety type lenders, they don't like those group structures. So you have got to be careful in terms of, if you then create that, what's the impacts then on your lending options. Now, it may well be that it's worth it because the difference in interest is marginal, the difference in tax is bigger, for example, but you've just got to understand it and speak to every party. So much you're speaking to a mortgage broker in conjunction with your accountant, and a good accountant will always say, go back to your broker, check through this, make sure that works.
Yeah. And along the same vein, Ellie, and I want to circle back on this today, is the idea of incorporation, which I know a lot of people with properties in their own names have been thinking about, will probably after this budget be thinking about more so. So I want to come back and talk to you about that. Just kind of continuing through the list of the key announcements, really. The mansion tax, as it's been dubbed now, an annual surcharge for homes over £2 million. In the context of investment, I don't think that really impacts us, but I do want to have that conversation in the context of what this budget really says, which we'll come back around to.
Yeah.
This was an interesting one. Overnight visitor levy for short-term and holiday lets. So local authorities will be able to introduce a tourist tax. That can be on Airbnb and service accommodation, those sorts of things. So I think that anybody who's moved into that space, I moved into it. I did some. I've actually moved out of it for various reasons. It's just too much hassle as far as I'm concerned. But anyone who's in it, and I know that it is still a very popular strategy, you can make a lot of money in it, but I think that that's definitely something to be aware of now. I think that those were the key things that impacts us as property investors, as property owners.
Yeah.
But I think that there's some context to the budget, and I think we should discuss the wider direction of travel. So, I mean, just first of all, Ellie, your general thoughts on the budget. We've had it now. How important do you think the fact that we've just had it and we can perhaps move on?
Totally. I think that's the biggest thing, isn't it? I think it's so late, and it's been spoken about by, I think we've had a very political last 6 months, haven't we? There's been a lot of talk about politics in general, different parties. We've got new people coming into the space. I think it's been a very political environment over the last 6 months. So as part of that, we have been talking about the budget. And I don't think it's helped. I've mentioned it before that there was a lot of talk about what might happen. I think it was on the verge of scaremongering. I don't know what the thought process was behind why you would do that. I don't know, but I don't like it. And what I don't like is the fact that it's basically it stopped people making decisions. And I think this late in the day, when people are generally slowing down in that decision making before Christmas, it's just moved that earlier and earlier. So it'd be interesting to see what the transaction numbers are for the last quarter of this year, but I would expect them to be significantly lower than we've seen in the previous 3 months of this year. Because when people are concerned about things, uncertain about what's going to happen, there has been talk about stamp duty change. There has been talk about a lot of things that could have had an impact on the property market. Why would you make that decision? You wouldn't. You just think, do you know what? I'm just going to put this on hold and I'm going to come back to it next year when I know what's going on. And then it causes just an air of unpredictability, of uncertainty, of a lack of confidence. And I don't think that is good for the market. But it's done now. We know what's in it. It wasn't as bad as it could have been. Was it good? No. Was it, but it wasn't terrible. And we know what we've got to do now. We know that stamp duty hasn't changed. We know that we're going to be paying a bit more income tax, however we are paid and however that's structured. But everyone will be paying a bit more income tax. But the only thing that we can do is keep going, isn't it? And buy more. And if, we will be in a situation, as we all are at home with our energy bills, that we're paying more for the same. And that's been a bit of a theme over the last 5 years, hasn't it? With food and energy.
I shared a message and a thought with my clients who were obviously very anxious about the budget. A lot of people have actually just wanted to sit on their hands, as have many people, in the market, and business owners. And stepping away from this budget, everybody's paying a bit more tax. The fiscal drag here is substantial. Actually, the amount that the government will be able to claw back through these measures, which only look like 2% here and there, but the freezing of the threshold, the impact on businesses, it's a substantial amount of money that actually over a period of time that they will be able to collect. But, I think that this does highlight, and there was lots of conversations about pensions and there are changes there. For me, I think it really does, again, highlight the importance of having assets that generate you an income, which is so ironic because landlords have been so heavily under fire recently. But this budget, again, just says to me, like, I'd probably still rather pay an extra couple of % on the properties that I own and the income I generate, and maybe the capital gains that I'll make over the long term, than be employed and the government be able to just still take what they want, maybe come from my pension. And so, I think everybody has been affected by this at the end of the day. And it hasn't really changed my opinion on owning assets at all.
No, and I think the more variety of incomes that you have and investments of, lots of different areas, the better. Because if you diversify your income streams, then you have got the choices that sort of picking and choosing where you're taking that income from. Growing, the more that you can grow your business, the more money that you will have. And does this mean that maybe you need to, I don't know, move into HMOs rather than single lets, move into SA, although, you're not giving it a great rep today, but move into different types of investing in order to maximize your income. We've got to be thinking, and in the same way as everybody for the last 5 years has probably been making slightly different decisions on what food they're buying each week. And, this year or last year, perhaps we're all thinking a bit more about, do I need to put the heating on today? Because it is costing a lot more than it was 5 years ago. But everything is more expensive. And whilst growth is low, we've got to individually take account for ourselves and say, right, how can I beat that growth? How can my growth be better than, the GDP effectively, isn't it? Because if you can outperform that, then you will be doing better than other people.
Do you know what the most frustrating thing about this budget was for me? I think it was the overall sort of the consensus, the narrative behind it. I think that this was a very Labour budget. And look, we're not here to discuss politics, but I do think it was a very Labour budget. There wasn't a huge amount for businesses, for, pro-growth strategies, for pro-housing. And I think that whilst I think there are very few people that had an issue with paying a little bit more tax, I think everybody kind of gets the importance and why we need to do that at the minute. But in the absence of that, that really concerns me. And it still concerns me. And I do wonder how, when this budget was so tax heavy, how we plan to, build prosperity from that. That's tough. And I don't want to attack individual policies. And I think there are different ways of looking at different things here. But the 2-child benefit caps, I think, is a good example. Certainly, in my opinion, that is where a lot of the focus and attention was. Now, there are different reasons for it. And you've got some thoughts around actually why you think that is quite important. And I don't disagree with that, Ellie. But I think sending more of the sort of the taxed income in that direction and maybe taking the emphasis on growth, and that concerns me.
Yeah, I can see your point. I mean, I agree with the fact that we shouldn't have a tax benefit. And even if you take out all of the other reasons, like the moral reasons why we shouldn't have it, economically, it makes sense. Children that grow up in poverty are more likely to rely on benefits as adults. So if you just take that statistic, you are creating a world, hopefully, where in the future people will be relying less on benefits. So I do agree with it, but I see your point that if it's there instead of something else rather than as well as something else, then I think overall the picture is we're prioritising that over growth. And that's the tricky bit, isn't it, to see Then you step back.
And I don't believe that was accidental. I think the mansion tax is a great example. It's actually not going to
Yeah.
generate a huge amount. I think that it looked great for a Labour budget to say we're taxing the wealthiest people in the country. I think it appeased the Green Party, and I think that there was definitely a lot of politics in this budget. Who knows? That's my opinion. It doesn't change the outcome. It doesn't really change what we need to do about it. But, just sharing my honest thoughts.
I see your point, and I think perhaps I know that there are a lot of things that have happened in this budget. There was definitely some pro-growth stuff that I have seen. I think somebody commented on a post that you put on Facebook the other day, and I can't remember the detail, which is going to annoy me. But there are some things that are pro-growth, which I think perhaps haven't made the news. And I think that's where it becomes more political, doesn't it? Which, news, various different media outlets will share things that they want to share from their perspective and how they want things to be seen, but we don't always get the full picture. But we need, with the planning issue, it's a change in policy, isn't it, rather than money being thrown at it. I suppose you could employ more people and make the process quicker, put some money into that, but it's a policy change that needs to happen. And I think it's a change of attitude from the general public as well, because how many times do you see people pro developments? You don't. People aren't pro developments in a world where we need more housing, or a country that needs more housing. Is anyone ever going to say, "Oh yeah, brilliant! I can't wait for you to build 200 houses in my town"? Like, people don't want it. All they are is scared of the impact that's going to have on school places and doctors and waiting lists and all this. It's all these things rather than, we need more housing, we need affordable housing, we need places to live.
I mean, the reality is, and the budget is a great example, some things just get decided for us. And I think that planning is one of those things that, to some extent just needs to be taken out of the hands of the decision-making capacity of the lay public. Not everything, of course, but there certainly are certain things.
Totally. We haven't got the knowledge or experience to know the things that sit behind that. We don't know where those S106 payments are going to necessarily. We don't understand that. We don't sit there and understand the impact of highways on decisions. We don't know that. So for the general public to have such a big impact on whether things get built or not you're right. I don't think it's sensible.
I'm going to share something. I recently signed a quite complicated Section 106 to finalise a planning application.
Mm-hmm.
And as part of it, there was quite a large affordable homes contribution. The original bill started at 100,000. We managed to get that down to about 30,000 through various consultant specialist reports. So quite an expensive process. But ultimately, that was the affordable homes bill. Now, we weren't building any homes on our site, but we were contributing to affordable homes. And in the agreement, there was a line drawn up by the council and the council solicitors that basically asked us to confirm that we were in agreement that that money didn't need to be spent on affordable housing, which, is exactly. So when you say we don't know where the money goes, you couldn't be more right, Ellie. And obviously I said, no, I'm not agreeing to that. Either you use it for that and you use it within this period of time. I think we said 10 years, which they ultimately agreed to, or, you can't use it and we're not going to pay it. And, this is ultimately what it all boils down to. It's an agreement. And big developers, big home builders, they do have a bit more clout than the smaller developers. But you're right. And a lot of it just goes on the big bonfire. That's, and some of that's got to change. And there's got to be a bit of reform. But look, you and I are not going to change this from our soapbox. The general context of the budget, I think, was important. I think it's quite telling. And I do wonder whether, for example, the mansion tax doesn't even kick in until 2028, which is unusual when some things kicked in overnight. I do wonder whether that'll even happen whilst Labour are in government, to be quite frank. So
it's a difficult one because the only information that they have currently is based on council tax bandings, that the majority of council tax bandings were set up in the 90s.
Wrong.
How does anybody know how much a property is worth? Who's going to decide whether a property is worth over 2 million or not? Because conveniently, I'm sure there'll be loads of properties that are now worth 1,900,000. How do you decide that? Who decides that? That is a really incredibly complicated process. And are you then going to have to value every property in the country just to confirm? Because how do you know that my house is not worth 2 million unless somebody actually comes down and has a look at it? So where does that start? And then I've seen a few things people have put online about, is that the beginning of new council tax bandings and a whole review of the whole thing? Because nothing has actually happened since the 90s, have they really, in terms of valuing property?
I think it probably does need renewing.
Yeah.
That doesn't mean I'm saying that the prices need to go up, but I think it does need looking at. The VOA are a bit of a law unto themselves as well.
Totally.
I think, the budget on the backdrop of the Renters Reform Act is also interesting. A lot of downward pressure at the minute. I mean, we've seen so much downward pressure for years now. And, well, let's talk about incorporation. We touched on this already today. Very clearly, the direction of travel is away from the private landlord, isn't it? And it's to the corporations. It's to landlords operating professionally through their business entities. So you mentioned incorporation, Ellie.
Yeah, I mean, this has been something that has been going on for quite some time. I mean, the tax changes came out, I think, 10 years ago, I think, wasn't it? No, it was a 5-year implementation, which I think finished in 2020. Could be wrong with that, but around that time. So, yes, this has been going on for quite some time. I think that in the context of landlords on a very general scale, and this is nothing personal, the majority of the landlords that we work with particularly are very professional. Everything's done perfectly. The properties are really high standard. So this is not anything personal, but I think historically the quality of properties has been much poorer. So I do understand that direction and I agree with it. I think that on the whole, and again, this is nothing personal, but on a very general level, people that have 1 or 2 properties as a bit of a pension fund or something that they're kind of dabbling into will not have the same care and attention to those properties as somebody who does it like you do as your full-time business, because you don't have the knowledge and the understanding around it either, or the tools put in place to make sure that things are looked after properly. So I get it. Incorporation is a really big part of that. I think anybody who still owns property in a personal name, I think you really need to have a think about what to do with that. The difference in interest rate between personally owned properties and limited companies is diminishing. As soon as you own more than 4 properties, there are a lot of high street lenders that won't work with you anyway. And if you own 10, 15, 20, various different lenders have got different rules around that. But a lot of the high street lenders won't deal with larger landlords, whether they're personally owned or limited company anyway. So as you own more property, you are pushed down the more specialist route, in which case, the difference in interest to the lenders that we work with, the likes of sort of Fleet, Landbay, Lend Invest, those kind of lenders, there is no difference. It's the same rate. So that's something that kind of can be put to one side, which was a big consideration 5 years ago, and it's not really a consideration anymore. But there are loads of other advantages of owning property in a limited company. And again, this is not tax advice, go and talk to your accountant, but you can use the money that's sitting in your business account as a separate entity to you. You can use that money to reinvest into property rather than having to take all the money that you earn from your properties as income. So that's a huge tax advantage. It's just different ways of structuring your business so that you're not drawing all the income and you can keep it in there and you can do other things with it.
Yeah,
so
I agree. Anyone just getting into the market now, looking ahead, wants to build a portfolio, I'd be very surprised if anything else made sense now. And I'd also just be anxious that more of these changes, these attacks on the private landlord are going to come forth.
Absolutely. But there are still accountants that are saying if you only intend to buy 1 or 2 properties, buy it in your personal name. But I think that the problem with that is that it's not very easy to change it. I think that's the difficulty. What if you become a high rate taxpayer in the future, even if you're not now? I mean, that is a big impact in itself, isn't it? What if the income that you're earning from that one property pushes you into being a high rate taxpayer? You can't easily change that. So I think, again, I'm not an accountant, but I think when accountants look at it, they are sometimes just looking at your scenario now with what you've got now, rather than future proofing, like you say. How do you know that more things aren't going to change? With the income on rental in a personal name could change in the future, couldn't it? It's been spoken about now. Perhaps that will be added on at some point in the future. So you've just got to future-proof your business model and deal with it as a business.
I know somebody who's just inherited a lot of property and all of it has been inherited in their personal name. It was owned in their parents' personal name, and it's going to cost them an absolute fortune in tax every single month. And they've got to think about what they do with it, but it really doesn't make sense just to hold it and operate it the way that they do now. It's just not profitable enough. Let's talk about mortgage rates then, Ellie, as I think a consequence of perhaps the budget where we are currently in from an economic perspective. What are you seeing? Where are we with swap rates, with consumer rates at the minute?
So rates are actually dropping, and I think that's a combination of a few things. So the 2-year swaps are reducing, the 5-year swaps are reducing. Apparently everything's been priced in with another rate reduction for the meeting this month. That's what I've heard. So hopefully that will happen. But particularly on residential mortgage rates, they have come down. They were at their lowest level that they have been for a few years now. So that's really positive news. I think that there's a combination of two things here. One is, yes, rates are on a downward trajectory. Inflation, and we'll come on to that, but it's kind of sitting at around the 3.6 figure. It's not the high figures that it was. No, it's not coming down any further, but it seems to be fairly steady, which I think seems to be enough to appease everyone for the moment. That actually other things are more important, and trying to bring mortgage rates down probably isn't going to have an impact on inflation itself, because it's mainly food prices and energy. You know, it's things that aren't going to be impacted by disposable income. So that seems to be okay. That seems to be fairly steady. So yeah, base rate hopefully will come down again. Mortgage rates are coming down. But the other thing to consider is that lenders have targets to hit. They have got an amount of funds that they need to get out of the door. Now, since April, if you're talking about a fiscal year, since April, transaction numbers have been down. I've had a couple of calls from lenders actually in the last few weeks asking around what my thoughts are in terms of why transaction numbers have been down, what's caused it. Is a particular thing, is there a reason we're not going to a particular lender, or is it an overall transaction numbers? And I think that this year has definitely felt quieter than last year. We had a really busy 3 months at the beginning of the year before the stamp duty changed in beginning of April. And then since then, there seems to be one excuse after another. You know, we had a hot summer, there was lots of bank holidays, Easter was late. I think that generally we are taking holiday more seriously, I think, the last couple of years. This year, I think I've seen it more so. People take a few weeks off, and they actually have a few weeks off. I think that with the work-life balance, I feel is tipping more into life rather than work, which I think...
Well, I think everyone's thinking, what's the point?
Yeah.
Just keep taking more away from me.
Yeah. Maybe it's that. I don't know. It's definitely felt quieter. And then this budget has been a huge sort of build-up, hasn't it? It's been kind of, a month or so we've been talking about it now. And now it's the 1st of December. Yes, the budget's finished, but we've literally got 3 weeks until Christmas. Kids are breaking up. You know, life is really busy at this time of the year. Are we going to go and find properties to buy? I don't know. If you're looking at auction properties, you've then got Christmas to consider and solicitors. Solicitors seem to still be incredibly busy, which is bizarre. But I've had a few solicitors refuse to take on work recently because they're so busy. I know that there was a lot of clients who were concerned about the budget and wanted to get completions through before the budget, just in case there was a stamp duty change. I don't think that's particularly helped. But yeah, it's a really funny time. But lenders have got targets to hit, so I think that we will see some special editions. We'll see rate reductions in January to try and push that last 3 months of the financial year.
Well, I really do hope that that's the case. I hope we do see a base rate reduction later this month. I hope we do see some softening of consumer rates in the new year. And I hope that you're right, that we're right, that getting this budget out of the way now and just knowing, I just hope that starts to settle things and we can just get back to doing good business. I mean, the summary for me here is that it wasn't as bad as it could have been, but it was still bad. I think on the backdrop of the Renters' Rights Act and all of that downward pressure, I think a lot of tenants are going to get dragged along with these tax changes as well. So there's downward pressure on tenants as well. I think that if you step away from this, it hasn't materially impacted the opportunity for property investors. Short term, it's going to cost a little bit more, but I think long term, ultimately, tenants are going to pay for a lot of these changes, and landlords, some of them, the tired landlords, the landlords who don't want to do it anymore, they'll sell.
I think there will be lots of opportunities. I mean, there was when the tax changes came in years ago, you know, it is, if you're thinking of retiring in the next 5 years, then you will do it sooner rather than later when things like this happen. And we'll probably see that, you know, like we did with COVID. I mean, the early retirement rate in COVID was crazy. You know, people think, well, do you know what, all of this is happening, I'm just going to check out. You know, I'm not making that much money. I'll just check out. I'll sell up. So I think there's loads. I've had so many inquiries for existing HMOs this last 3 months, which more so than I've ever seen. And that is tired property. A lot of it needs a complete refurb. But there's a huge market in that. Article 4 areas, existing HMOs. I think there's a big market for that. There will be plenty of opportunities for newer investors coming into the market to make the most of this situation. I have no doubt about that.
Yep. And I think that properties look better value now than they have done for years. Yeah, they've adjusted relative to inflation, and rents have gone up. The pace of that has slowed down. Yes, there are some changes, some tax changes afoot, but I think if you're buying now with that long-term view, I couldn't agree more. And I think that this is a great opportunity if you can find the stock at the minute. And that's the biggest challenge, that's the availability of stock. But if you can find it, I think that this is a really good time to be buying.
I think we'll see more after Christmas. People will be putting their property on the market for now because they want to get in their mind, the best price. And I don't think now's the time to do it. I don't think it has been for the last month or so. So I am feeling really optimistic about January. I think we're going to have a busy first quarter at least and see what happens after that. And hopefully the dust will have settled with all of this. The tax changes don't come into April 27. So make hay while the sun shines. Let's have a good year this year before the tax changes go up.
Well, you heard it, guys. Make hay while the sun shines. I couldn't agree more, Ellie. Thanks for coming on today and sharing your thoughts and giving us that insight to what's happening on the lender side of things. Don't forget, guys, if you do need some help with your lending at the minute, if you need a new mortgage, a refinance, development facility, whatever it is, head on over to the hmoroadmap.co.uk, find our page for financial services. Ellie's there. You can drop an inquiry with Ellie and Ellie will be happy to get on the call with you and help you with any of your mortgage requirements.
Absolutely.
And fingers crossed, hey, that the base rate comes down in December.
Let's hope so.
Inflation continues to drop and we can all go out and we can start focusing on our businesses again in January.
Absolutely. Let's hope so.
Brilliant. Thank you so much, Ellie. And we'll see you next time on the show.
Thanks, Andy. Speak to you later.